Again, today we're going to talk about trading equities and CFDs with Autochartist. It's going to be a little bit of a different format than you may be used to. I'm working by myself today, so I'll try to keep open that question box so that you can fire questions at me throughout the session. We're going to talk about any of the markets that are moving actually this morning. I do a live webinar today, so the U.S. markets aren't open, but towards the end, maybe about the halfway point of the webinar, the U.S. markets will open, so you may start to see some activity on the charts. Okay, I want to start out today with, like we normally do, with our disclaimer. The Autochartist service includes chart pattern identification in respect of foreign currencies, commodities, equities, and stocks. There are potential risks relating to investing and trading. You must be aware of such risks and familiarize yourself in regard to such risks and to seek independent advice relating thereto. You should not trade with money that you cannot afford to lose. The Autochartist service and its content should not be construed as a solicitation to invest and or trade. You should seek independent advice in this regard. Past performance is not indicative of future performance. No representation is being made that any of the results discussed within the service and its related media content will be achieved. All opinions, news, research, analysis, prices, and other information is provided as general market commentary and not as investment advice. Autochartist MDIO software, their members, shareholders, employees, agents, representatives, and resellers do not warrant the completeness, accuracy, or timeliness of the information supplied, and they shall not be liable for any loss or damages, consequential or otherwise, which may arise from the use or reliance of the Autochartist service in its content. Okay, that being said, we're going to move on to look at some live action this morning because there's not much to look at as far as any prearranged slides and things like that. I'd rather work live because there's plenty of examples of what I want to talk about today with all these indices that Autochartist covers, as well as the global CFD equity market. Okay, let me open up my question box here. You guys can't see it, but I will open that up for myself right now, and I have to expand it a little bit so I can read it. Okay, gentleman asked, what is actually equities? Well, equities to a U.S. trader means represents ownership in a company. So it's some people call them shares. I've learned a lot in the last year working with CFD clients that the term shares is used quite a bit. So equities are shares in a company. So it represents ownership, and they trade on exchanges or bourses throughout the world. Okay, it looks like the question box is working. Before we move on, I'd like to ask a poll question here too, and that is question number 1. On which continent do you live? This will help me figure out where the audience is and perhaps gear the conversation into the index or this index CFD that is more relevant to you. I knew that was going to happen. It's split a third. So we'll cover as many as we can. I'll move around the universe. I have a second question here also, and that is, which index do you trade? I guess it would be, because I use futures here, we can't trade CFDs in the States, but kind of get the gist. The E-mini S&P might be called the US 500. There's also, if you trade the US Dow or US NASDAQ, can just answer those questions too. So launch that question here. Just because I want to be able to cover, again, as much material as I can. All right, I knew that was going to come up too. I figured the S&P was pretty popular. That's why I put it first. Okay, and then finally we have a last question here, and it's kind of just to let me know what kind of a trader you are, and so I can kind of get a grasp. I've been trading and analyzing the markets, writing research, books, things like that since 1982, and sometimes I use the street language when I talk about the markets. So if you have any questions, if I said something that you don't understand, then feel free to fire the question at me, and I'll stop what I'm doing and I'll try to answer it. That was a good question, the first guy who asked about equities, because again, it may not be something that everybody's familiar with. All right. And if I don't get to your question, you can always email company, or you can send them in, send them to the website, or make a comment. I also write commentary for Autochartist every night on the index CFDs as well as the FTSE. I cover the STI for the Singapore traders over the weekend, and I also cover a Singapore stock and an Australian equity or Australian shares over the weekend. So that being said, we'll move on here. Okay, first thing I want to show you is that some of the features of Autochartist. We have chart patterns here. Okay, this section will create chart patterns that are, some consider the classical chart patterns. And they include triangles, wedges, channels, inverse head and shoulders patterns, wedges, flags, all kinds of patterns. If you want to see what Autochartist has, and you're up on the page and you're actually live, you can go to the new search, and you can go to this advanced search area, and you can see that the patterns here are listed as ascending triangles, channels, wedges, rectangles, things like that, triple bottoms, double bottoms. And as the pattern develops, Autochartist will identify it as either an emerging pattern, giving you a fair warning in advance that something is happening, whether it's a continuation rally or maybe a breakout occurring, or something, or something is happening. That's what an emerging market shows. And then once it breaks out of a range, either support or resistance, it becomes a completed pattern. So the reason why I mentioned patterns is I do webinars throughout the year on the importance of the patterns and what they mean, because some patterns are trending and some patterns are non-trending, and some are indicating compression and coils and breakouts like triangles, and others represent long moves like channels, which may be more conducive to a swing trader, a trader who likes to buy support, sell resistance, and continually reverse up and down. Breakout traders tend to be attracted to non-trending patterns because they like to wait for the breakout and wait for the market to give a signal to trade in a particular direction. So that's why it's important to know which kind of pattern fits the personality and the trading style that you want to do. If you don't reach down sometimes and think about, what kind of trader, reach inside your head and figure out what kind of trader you are. Sometimes it's difficult to trade because there's too many choices, and you end up with a condition I call analysis paralysis, where you're working with too many choices to make a decision. So a lot of traders like to blame the system or blame the technology, but sometimes it's just in their head. So, well, here's the question is, what's the difference between stock and shares with equity? There really is no difference, in my opinion. They both represent ownership in a company, and they're traded on an exchange or bourse, and they represent value. And traders try to buy things that are underpriced and sell things that are overpriced. So there's some nuances between maybe how a CFD is structured versus how U.S. market's structured, but overall they're all fairly close. The rest seems to be an accounting type procedure or how an order is filled. So those are some of the differences. Okay, the first thing we're going to look at today is these chart patterns. You can see that in this particular market, this is the Australia New Zealand Banking Group stock or shares. You can see that what I look for is a triangle formation. Okay, Autochartist has identified this. These are all 240-minute charts. What I do is I filter different ways in this section here. I look at intraday, I look at end of day, so I go by exchange, such as Singapore Exchange or New York Stock Exchange, London. I also segregate this list by the trading vehicle. In this case, this is indices, and these are Forex markets here. These are commodities. But here I've gone to the exchange, the Australian exchange, and I've selected a specific time period, a 240-minute chart. So there's no other filters at this particular time on this chart. So I basically take what's come up, and this looks like it came up based on U.S. time. You can control the time zone. This is at about 11 p.m. last night, my time. So Autochartist has identified on this 240-minute chart a triangle chart pattern. The characteristics of this pattern are that it shows a wide area where the pattern began. Okay, this area here, as the market broke into it, I'll blow this chart up in a second. This period, this action here represents the initial trend, and Autochartist gives that a very high rating. That's 2, 4, 6, 8, 10. That's the maximum. So you can't see any action over here. On the MT4 platform, if you get it, and when we expand into equities, you'll be able to see that Autochartist, you'll be able to see in the past how this market broke down. Right now you're looking at a small amount of price action, but Autochartist says, okay, this was strong enough to yield a 10 rating. So it's a very strong rating. Okay. Now, as the market began to form support and resistance, okay, you can see right here it finished the support line, and right in here, from here to here, it created this resistance line. But you can see that the action was compressed. Okay, just like the triangle compressed to form this apex, the support and resistance line compressed. That's why we call it a non-trending pattern, because inside the formation there's basically no trend. Now the beauty part about working with a non-trending pattern is the longer it stays inside of a range or inside that pattern, the more clear the market shows that it's going to break out in a particular direction. So what happens here in this case is doesn't tell you where it's going to go until it actually breaks out, but it just kind of gives you an idea that something's going to happen. That traders cannot keep that market inside a tight range for a while, for a long time. So it kind of gives you a pinpoint when the market's going to move, but it doesn't tell you the direction. So this is a kind of a signal or a kind of pattern that you want to look for if you're a breakout trader. So once the market makes its move, you can see it broke out through the support line, then Autochartist will give it a breakout rating. And in this case, it's just it's slightly above average. It's a 6-bar breakout. A lot of times you can tell from looking at the candlestick how much selling there is. So if it's a thick candlestick, if it's a long candlestick with very little wick action, then it tends to be a somewhat stronger move. If this whole body of the candlestick was underneath the support line, then this breakout would have been a lot stronger. That would have gave you a little bit more confidence and a little bit more clarity that there was some really strong selling conviction behind the move. So again, if you're taking notes and if you're a rookie, learn a little bit about what the candlesticks represent. You can't see volume on this chart, but certainly if the market was making a move of this size and it was breaking out, you'd want to see some kind of increase in volume, something, maybe an increase in this particular bar that's greater than the average volume. That would have told you that there's some power behind the move. And again, you want to look at whether the market, this whole candlestick, and again, learn the terms wick and body, if the body was underneath this particular support line. Now after it breaks out, Autochartist throws this arrow in here that gives you the direction. It also gives you this box here, this support box or this target price box, and that represents where it believes that Autochartist believes the market can go, and that's based on an algorithm. Now the first level of the box is listed here at 1988. That's the first target. You can see also here in red. The bottom of the box is 1903. So Autochartist is saying that in order to be a successful pattern, it's got to hit this time zone or this price zone inside this time frame. Okay? So this looks like a relatively fast move that it's looking for. All right? The other thing you can do, and I'll blow this chart up here in a second. Hang on one second. All right, so you can see a little bit better. The other thing you can do if you're doing conventional charting is that you could take this low and you can take this high here, this extreme range, and you could calculate out approximately where 50% is. For example, if this low price is 1862 and the high price is approximately 2132, you can calculate that a halfway price is about 1997. So it comes in a little bit above the Autochartist target zone. You can also calculate a Fibonacci retracement, which is identified as a 61.8% retracement. All right, and that comes in. That would be a little bit of math here involved. Hang on one second, and I'll tell you. It's about 1965. So that's where the Fibonacci comes in. So you can see that if you're using conventional analysis, besides the Autochartist target box, you can see that 1997 to 1965 is a retracement point using percentage retracements. And since it overlaps this zone, that gives you more reasons why this market is likely to break into this zone. So it kind of gives you an idea of what's going on. Now, if you take a trade to the short side on this breakout, remember to always use stops. Now, it's not necessary that you place stops way up above previous tops, because remember, this is a momentum move. Okay, so with momentum, you want to see red candlesticks. Okay, you want to see big, long candlesticks. All right, so as this market begins to work lower, obviously you want to see a follow through, and you want to see it fast into the zone. So by all means, use stops. If the market happens to show any kind of green on any of the bars on the subsequent breaks, those are warning signs that the downside momentum is slowing down. Okay, and that's certainly a clue. For example, if you look back here, you can see all these greens, a series of greens, and then you start to see right here this bigger red one. That's a sign that things are slowing down. You can see that even though it was green later on, the gain was not that much. So those are always good clues, especially when you get a series of moves. Okay, this may not be the best example because it looks like it's a thin stock. All right, Let me go back here. Got a question here. You have